What's up? What's up? What's up, my mind your money business folks? I'm trying to get this camera right. I'm using my computer, so please forgive me. All right. So today's stock market was great. So I'm giving a report on the stock market. The Dow jumps 500 points. S&P closes at an all-time high of 5,700 for the first time a day after Fed slashes rates. You remember the interest rates came down 50 basis points on yesterday. And then when it came down and when the Feds made their announcement, some stock prices actually declined. But today, oh boy, today was a good day. So hopefully you are investing. Hopefully you have a 401k account, 403b, you have a SEP IRA, you have an IRA, traditional Roth, you have an individual brokerage account that you're managing, or you're going through a financial advisor who's, investing your money on your behalf. So today I'm online a little late because I'm actually off work today. So yeah. So let's get into it. So stocks jumped Thursday with the Dow Jones Industrial Average and S&P rising to new all-time highs as traders cheered the Federal Reserve's Wednesday decision to lower interest rates by half a percentage point. The 30 stock index advanced 522.9 points, or 1.26%, ending at 42,025.19, marking its first close above 42,000 threshold. The market is increasing, people, and I see things continuing to increase towards the end of the year because the Feds are meeting again in November and December, and more than likely they're going to continue reducing interest rates. And when interest rates go down, growth stocks go up, because there's more money in the market. Companies can borrow more money to grow. People can borrow money. Regular consumers like you and me can borrow money at a lower interest rate. We can now go out and buy that car at a lower interest rate. We can now go out and purchase that home at a lower interest rate. So we're putting more and more money back into the economy, which is growing businesses and increasing their stock value. Okay, the S&P 500 rose. I'm reading an article from CSNBC, by the way. It says the S&P 500 rose 1.7% to close at 5,713.64, topping 5,700 for the first time. I want to say at the beginning of the year, I think the S&P was maybe at 4,500 points, and now they're at 5,700. So that's pretty good. The NASDAQ composite surged 2.51%. So it says traders got some validation that the Fed was engineering a soft landing for the economy on Thursday as weekly jobs claims fell 12,000 to 219,000, which was far below estimates. Because remember, in August, they came out with the jobs report and they reported lower than expected. But it didn't seem to affect the market as much as they thought. Also, the experts were expecting a 25 basis point cut yesterday, and the Feds came out with a more aggressive cut of 50 basis points. So there's a lot of reports that come out that can affect the market, and that's something that you need to become familiar with. Sometimes it affects the market in a negative way, and sometimes it affects the market in a positive way. I said on my live on yesterday, or one of my videos yesterday, that the last time that the Feds cut rates was in March of 2020. And the first week that the rates were cut, the stock market went down. And then after that, it's been climbing ever since. Even though, interest rates were high, the market has still been at a steady incline with a few volatile months here and there. Okay, it says tech stocks rallied as rate cut spurred investors to return to risk, to return to a risk on mood. So let's see what NVIDIA did today. So NVIDIA rose today $4.50, which is good. I'm in the NVIDIA stock myself. It's the leader in AI technology. Okay, it's pretty good. NVIDIA. I'm happy. Let me see. What is NVIDIA? Okay, go back. So how many volumes? Wow, there was 292,387,706 volumes of NVIDIA stock that got sold and bought today. So that's billions of dollars that went into this one company today. Yeah, that's a good thing for NVIDIA. It also says AMD shares popped. I don't have any shares in AMD. Meta rose big today. Now, there's a lot of information people don't know about Meta. Like, well, it changed its name from Facebook to Meta because what they don't know, like Mark Zuckerberg is creating what he's calling the metaverse. And it's going to be like a virtual reality where you'll be able to put on these VR glasses, then you're given an avatar. You can purchase clothes for that avatar, cars, houses, real estate in this virtual world. That's why Meta is heavily investing in AI technology and purchasing those chips from NVIDIA. Meta rose today, wow, $21.15. Damn, that's a lot of money. Oh man. And I want to say it was like right after they gave their last earnings report, and then Mark Zuckerberg met with the founder of NVIDIA, Jensen Huang, and he was talking about future plans, possibly with NVIDIA or the purchasing of his chips. And the stock went down. I want to say it went down to like 400 and something dollars. And now it's at $559. It went up $21 in one day. Damn, that's a lot of money. But hey, that's what happens when you invest. That's why you invest your money in good growth stocks. If you don't want to invest in individual stocks, you can find an information technology ETF. You can go with Vanguard, which I believe is VGT. Let's go to VGT. Yeah, Vanguard Information Technology Index Fund. Wow, it went up $16.65. And that index fund is currently being sold for $579.65. But it's Vanguard. And the year-to-date return on that index fund is 16.75%. You don't get that in your bank. You won't get that in your bank or from your bank. Wow. And the current assets on hold in that fund is $88.64 billion. It's nice. So also, again, you have the information technology fund, and I guarantee you in this fund, you will have NVIDIA, you will have Amazon, you will have Microsoft, you will have those companies, any information technology, any big information technology companies within the US will be a part of this index. So you don't have to, park your money in that one individual stock. You can buy this index fund and go from there. Also, you can invest your money into an S&P 500. Let's go. Vanguard also, I don't have this particular, let's revert back. I don't have VGT, but what I do have, because it's cheaper and it's the exact same thing, is I have Fidelity's MSCI Information Technology Index ETF. Same fund, cost cheaper. Like that Vanguard fund was $500 and something, 569 if I'm not mistaken. The Fidelity's Information Technology Index ETF. So this is an exchange traded fund, meaning throughout the day, the stocks within this index fund is being traded throughout the day. That's it. And this stock is currently going for $172.40. Same thing. And it went up $5.19. But let's look at the year to date return. The year to date return on this index fund is the same as VGT, 16.75%. So the way I look at it is I will be able to purchase more of this information technology index ETF than I would at purchasing Vanguard for $500. That's Vanguard. They're known as the flagship of index funds, pretty much. They're like the Nike. Let's say Fidelity is Reebok. It's all in the name, but they do exactly the same thing. Also, let's talk about S&P 500. Funds. The S&P 500 consists of the 500 largest companies in the United States, right? And they're managed by by say like Vanguard. Vanguard has VOO. Vanguard's S&P 500 ETF, VOO. It went up $9 today. Man, that's good. And it's currently being sold for $524.91. And its year-to-date return from the beginning of the year until now is 18.91%. That's huge. And current assets is $1.24 trillion with the T. It's a large blended fund. Again, it consists of the 500 largest companies in the United States. And it also has NVIDIA, Microsoft, Amazon, Apple. I think Tesla's in there. Yeah. That's a nice return. And it went up $9 today. But I don't own this stock because I'm not paying $500. I want to be able to purchase more shares. So I have SPLG. And that's SPDR Portfolio S&P 500 ETF. The exact same thing. And this one is sold for $67.17 as of today. It went up $1.13. It's the exact same fund. Again, Vanguard, which is being sold for $500, is the flagship. It's SPDR Portfolio S&P 500 ETF. They have the exact same funds in it, except you can either buy Vanguard for $500 or you can buy this one, SPLG, for $67. And the return, the year-to-date return for the $67 SPLG S&P 500 ETF is 18.95%. Same. Yeah. And they currently have $44.37 billion in assets. A large blended, been in inception since 2005, November of 2005. So it's been around for quite a while. Anything, above 10 years is good to me. And then you look at, the year-to-date returns over the last 10 years, and then like, if you go to like Yahoo Finance, you can type these ticker symbols in like SPLG, VOO, VGT, FT, I said FTC. And you can click on like the year-to-date returns, the 5-year returns, since it's been in inception, so on and so forth. So yeah. What did Apple do today? Apple went up $8.18. Pretty good. Yeah. It closed at $228.87. Now, you need to know Apple is the most valued company in the United States. Its currently market cap value is $3.48 trillion. Damn. NVIDIA's getting up there. NVIDIA's at $2.89 trillion. So it's getting there. And then I think after Apple is Microsoft, NSFT. What did Microsoft do today? Oh, Microsoft went up $7.88. It's now at $438.69. That's a lot of money. And yeah, Microsoft is the number 2 company in the United States and is valued at $3.2 $261 trillion. Can you imagine? Yeah. But again, that stock is expensive. It's a part of the SPLG and the VOO S&P 500 index ETFs. So you can buy SPLG for $67. Microsoft is a part of it. So you don't have to buy the expensive, if it's expensive to you, single stock of Microsoft. You can buy the S&P 500 or you can buy the FTEC. I believe Microsoft is also part of the information technology ETFs and index funds. Yeah. Okay. So back to the article. It says the Fed slashes overnight lending rate to a range of 4.75% to 5% from 5.25 to 5.5% on Wednesday, which came as a surprise to some investors who criticized the size of this initial cut. I don't know why they criticized it, but I guess it's because it caught a lot of the experts off guard because they were expecting a lower cut. So it surprised them when they came out with a 50 basis point cut. And then you saw stocks being sold off towards the end of the day. Because I would say yesterday, the market was holding steady. And then after the report came out, it jumped. Everything spiked up. And then towards the end of the day, maybe like an hour before the market closed, things just started to go down. Not for every company, but for a lot of them. Okay, it's not surprising to see the market bounce pretty nicely today. Today, we were getting a little long in the tooth with some of the earnings growth estimates, said Timothy Chubb, Chief Investment Officer of Gerard Advisory Services. He's an expert, and I'm reading this article from CNBC because, again, disclaimer, I'm not a professional advisor. I am not a professional stock investor. I'm simply online giving my opinion on the stocks that I'm investing in and companies that I find interesting. And it also helps me, stay on top of things and understanding the market a lot better. And then hoping that you will do the same because, if I talk about something, do your own research, find out for yourselves. Don't just take my word for it. Okay, the article also says, it's almost over. They continue to move higher the last couple of weeks, but broadly speaking, there's certainly a lot of companies within the market that are really going to benefit from having looser monetary policy conditions, in particular, small caps, he added. Like, I hope people start understanding what's happening in the market and what's going to be happening moving forward, like with companies like NVIDIA, AMD, Broadcom. Let's see, what did Broadcom do today, VGO? Broadcom went up $6.28, closed at $167.42. It's a semiconductor technology company. They make chips. Market cap of $781 billion. Wow. Yeah. But either way, what I was saying about AI technology, technology is driving the market. Like Microsoft, Apple, NVIDIA, moving forward. They're calling like this technology boom or NVIDIA and AI technology the fourth industrial revolution because AI is going to change everything moving forward within the next 10 years. Because AI is going to be a part of the pharmaceutical industry, the transportation industry, like self-driving cars, 5G, communications. It's going to be in everything. Meta is creating this virtual reality that's going to probably suck your kids and some of you into it. Yeah, but in order for you to take advantage of this, you need to be in the market. You need to be investing into the stock market. You need to start, like my boy Reverend Ike would say, circulating your money. Stop spending your money and circulate your money. Start saying to yourself, everything that I'm putting out there, I'm getting back. And you can do that by investing your money into good growth stock companies. like Nvidia, like Microsoft, like Apple, like Amazon, like Meta, so on and so forth. You can park your money in, in these ETFs. Oh, also VTSAX. VTSAX is a good index fund. The earnings probably haven't posted yet because it takes a while. But VTSAX is Vanguard's total stock market index. Total stock market, meaning, say, if you do not feel comfortable picking any stocks, you don't know what index funds to choose this one. This Vanguard total stock market index fund, total market, means it covers the whole entire market. It covers large cap companies, it covers mid cap companies, it covers small cap companies, and I also read that it covers like micro size companies. And within this index fund, it consists of like 3,617 companies. I always go back to the example of Enron. Remember Enron bankrupt, where that guy stole all of that money and then people lost all their retirement savings because all of their money was in that one company. When you invest in these index funds, these S&P 500 funds, your money is being spread out amongst all those companies. So if one company goes under, like Vanguard, the managers of these funds will simply remove that company from the index and replace it with a company that is producing well. They manage the fund. You don't have to manage it. If you're not comfortable managing your own portfolio like I do, then put your money into funds like this one, and the managers of the Vanguard Total Stock Market Fund will do it on your behalf for a small fee. But it's not big. It's not a big fee. And VTXAX year-to-date return is like 18.16%. Like, my plan is when I finally retire, I may park all of my money into a stock like this or an index fund like this, right? So let's say if you go to Yahoo Finance and you type in VTSAX and the graph comes up, you can see everything about the stock, what it closed at for the day, how much money it made, the freaking the net assets. The net assets in this fund is $1.72 trillion. This is a safe place to park your money. This fund has been around since November 13th of 2000. So going on 24 years. Safe, beyond safe, right? But either way, say I would take $2 million, $3 million of my investments and roll it into this fund, right? Year-to-date return on this is 18%. 5 years, you would have received 84% return on your money. 10 years, 170%. This is no lie, people. Since its inception, over 20-something years ago, 354.33%. So this is a good place you can park your money after you retire, and you want to live off of your money. You let your money make money. And the rule of thumb is to always take 4%. Because let's say, oh, where's my calculator? Oh, here it is. I bring up the one on the computer so we could see this, right? Well, not see it, but I can tell you about it. No, not now. What is this? This is a calendar. I thought I didn't click on calculate. I clicked on calendar. My bad. Okay, so let's say I parked $3 million into that fund, and say that year it pulled in, let's say 15%. So 1 times, 3 million times 1.15. So I'm adding the 15% in there. I would have now for that year $3,450,000. But what I would do is I would only take 4% of that money. Instead of taking the 15% that it might have gained, I would only take 4%, right? Or I could take half. or I could take all. It just depends on what my, living expenses are when I retire. But that's $450,000 that I made off of that $3 million that year. Now, it may not be the same percentage return, every year, but on average, these index funds can bring in at least 10 to 12%. Last year I think they brought in like almost 20%. So let's do a more realistic approach of 3 million. 3 million. Of course, times 10% is going to be, oh shit. I didn't mean to curse. Even though I do curse, I don't know why I said I curse. Damn it. Times 1 point. So let's say 10%. Why in the hell did it keep deleting? Either way, it'll be $300,000, right? Yeah, so I'll have $3,300,000. Do I need that $300,000? No, because I'm going to also have other monies coming in. I have property, I have rental property. So yeah, if I take only 4%, of that 300,000, I will only take, say, 120,000 that year. So $10,000 a month, and I could leave the other monies in there and let it continue to grow each year, gaining 10%, and I'm only taking 4%. The balance will continue to grow as I leave my money in that fund each year. So that is what I plan to do. And that's something that you can do. Or you could take your money and find like some real estate property, like an apartment complex, and, decide to, make income that way. 13% or 7%, 8% return on your money from the rental income. And you can live off of that. That's how you live off the money that you invest. You circulate your money, like Reverend Ike said. I'm circulating my money. What I put out there, I get back. So the same with your thoughts, your time, and your energy. What you're putting your energy and your time into is what you're going to get out of life. And if you're not putting your energy and your time into things that are going to take care of you, then don't expect to be taken care of. Always expect to come up short. And that is the reason why you're coming up short, because you have yet to develop a plan. Where there is no vision, the people perish, meaning, and you don't have to be religious, but if you don't create a plan for your life, or you don't start setting things up for yourself, doing some type of investigation, research before you make a move, and or just handing your money over to people and expecting them to do right by you, and you're not paying any attention to it, then expect to come up short. Expect to get to a point and you're going to wonder what happened. Create a budget. You have to live on less than you make. And the time to do that is when you're younger, when you're more vibrant, when you have more energy, when you're willing to work the extra hours. Because as you get older, you will have less energy, and you're not going to want to do as much as you used to because you're just tired. You want to go to bed now. You don't want to like go to work at 10 o'clock at night until 1 a.m. when you worked the whole day and you got off at 4 p.m., earlier that day. And then you have to get up again, at 7 a.m. the next day and work another 8 hours. You're doing that 5 days a week. That can be done when you're in your teens and your 20s and possibly your 30s. But as you get older, you don't want to work those kind of hours, during your younger days. Younger, middle-aged days, either way, younger days, when you're younger, your 20s, 30s, 40s, that is the time to put your money in places that's going to work for you. Start investing your money in appreciating assets like stocks, like real estate, not depreciating assets like the latest car or the latest fashions that don't go up in value. So that's all I wanted to say today. I hope you guys have a blessed day. I hope you're in the stock market. I hope you're investing in the stock market. You're taking advantage of the Fed rate cut. that's expected to happen again 2 more times this year. So, yeah. So you guys take care, peace, and have a blessed day. Bye.